Hot inflation print, shifting rate odds, and metals still hold their portfolio mandate. Diversification, purchasing power, optionality. That's resilience you can size.
Hello and welcome to today's episode of Riding the Rollercoaster of Precious Metals. Trust me when I say you're in for a thrilling ride. Imagine this: between August 8th and August 15th, 2025, the precious metals market was all over the place. Gold reached record highs, but guess what? It ended down by 1.5%. It's like winning the lottery one minute and having it snatched away the next. Who would have seen that coming?
That sounds super wild. So what caused all these crazy ups and downs? Is it just the economy being totally unpredictable or something?
Right on the money. It's all about the Federal Reserve and their decisions on interest rates. New economic data comes in, and suddenly there's this cloud of doubt over whether they'll actually lower rates. Picture this: trying to catch smoke with your bare hands. That's the kind of elusive action we're dealing with. These uncertainties pulled down the prices for gold and silver like a heavy anchor.
Right. So does that mean the gold price is like a reflection of the economy's mood swings? Because that sounds really interesting.
Absolutely, you've nailed it. Gold prices actually mirror the overall economic sentiment. By the week's end, gold futures stood at $3,383.20 per ounce, showcasing a year-to-date rise of nearly 24.9%. Yet, because of those nagging questions about interest rates, it couldn't retain its crown and slipped a bit. Quite the dramatic turn, right?
Wow, that's a lot of fluctuation. So, what about silver? I've heard people call it a poor man's gold. Ooh, is that a fair description at all?
Oh, quite right. Silver often gets that label, but don't be fooled, it's had quite a remarkable year too. It finished the week down 1.3%, but year to date it's still up 22.19%. Think of it as the underdog in sports that you root for. It might not have the glamour of gold, but it can still pull off an astonishing win.
Haha, I can totally picture that. So, what about palladium? Did it have a fun week too? Was it as bumpy as the others?
Oh, absolutely. Palladium had quite the excitement. It rebounded by 2% to $1, 144.50 per ounce, driven largely by a decline in supply from major producers like Russia and South Africa. It's akin to a blockbuster sequel that surprises everyone and turns out to be a hit.
Oh, I see. So, it's like the supply chain drama playing out behind the scenes, making prices swish around. What about platinum then? Did it get into the action too?
Great question. Platinum did join the party with a modest gain, an increase of 1.1%. Its uniqueness lies in its industrial applications, especially in the automotive industry. Think of it as a Swiss Army knife. It's reliable and versatile, but sometimes it gets overshadowed by the glitz of gold.
Right, I can see how that's significant. So, if folks want to invest in these metals, what's the bigger picture here? What should they really keep in mind?
Fantastic focus. This week illustrates how economic data intertwines with monetary policy, heavily impacting precious metals performance. It emphasizes gold's critical role in preserving wealth, particularly in times of inflation and all this geopolitical uncertainty we hear about. So investing in these metals is a smart way to diversify and create a buffer against economic upheavals.
Wow, and here I thought precious metals were just shiny things to put in a safe. Haha, is this like a treasure hunt but with economic survival skills? I'm intrigued.
Absolutely. It's a bit like navigating a treasure map. There are risks, but with the right knowledge you can find gold literally and metaphorically.
Haha, love that analogy. It feels like I need to become an economic pirate now. Yo ho ho!
A hot PPI print jolts rate cut odds, the dollar pops, yields lift, and allocators ask, did metals just lose their edge? Short answer, no. This week's gold dip isn't a broken story. It's a live demonstration of why we own non-synchronous assets. Weather versus climate, day versus regime. Gold anchors monetary risk. Silver adds torque, Platinum bridges industry and energy transition. Palladium offers concentrated supply leverage. One sleeve differentiated functions. Central bank accumulation, geopolitical uncertainty, currency debasement fears. These are secular currents. Weekly volatility doesn't cancel structural flows. An elevated gold-silver ratio historically signals relative silver value. Tactical rebalancing may harvest spread while preserving core hedge. Ahead of September's Fed decision, stress test your metal sleeve. Sizing, instruments mix, rebalancing triggers. Turn fragility into a managed variable.